Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Just a little disclaimer, nothing should be construed as financial investment advice. This is just my thoughts, my opinions. You can read more below. I have two disclaimers, you can read those. So let's get into today's stuff. First, I'm probably going to have another video today, but getting in the economic data, jobs reports report 177,000, which were actually more than expected if you look at it, but you can tell the same games are being played, and that's why. And here it was. Look at this job, of course. Job gains in March were revised down to show us the economy added 185,000. Initially, it was 228,000. But here's the thing 28, 15, 20, 30, 38, 43. This is 43,000 jobs plus. Now, if you look at it here, they reported 177. That's if you take away, that's really 131,000 jobs, if you ask me, right at consensus, but below the forecast. This would actually be, if it was 131,000 jobs, that would actually be very poor. That would actually not be a good jobs report number. But as you can tell, they're up to the same tricks. It may not be Joe this time doing it, but they're up, new boss, same as the old boss. Let's just and I think this month's going to be revised down too, so they can just keep getting a headline number. So, of course, the market, I can point out the BS all I want, but showed U.S. labor market remained resilient. And I said the tariffs are nothing; they're not bad. Uh, I said they're nothing. There was an article said all the tariff is gained. Now the economy is poor and weak, and maybe this is the last rally if you actually look at the markets. But this is the reality, and this is the reality. All the reasons the market is going down, they're there. America's just a poor nation, and we'll get more into it. We'll look at there's a couple of things that I look for indicators. I'm going to do another video later today after this one, just because life has gotten super busy, so I can't do it as much. But so here it is. If you want to do more, and this will eventually, I'll talk about the layoffs. But Walgreens to close 1,200 stores. That's a lot. That's a lot of stores. That's a lot of people laying off. A lot of pharmacist jobs. Everyone thinks that, oh, just retail cashiers. No, Walgreens has pharmacy, and those pharmaceutical jobs, the pharmacist jobs are good paying jobs. So you can see here, Walgreens to close 1,200 stores. And that also shows the consumer is weak. Walgreens, they have food, medicine, your everyday appliances, and you can tell that the consumer's just weak. They're not going 24-hour pharmacy. And I reported this, that a lot of subscriptions are now going unfilled. And I mean, it's not going unfilled for the right reasons, meaning natural healing, among other things. No, they're going unfilled because they can't afford to pay for their. Look at this. So many stores closed, and people are concerned about pharmacy access. So this is a really, really bad thing that Walgreens delays in medication adherence, worsen health outcomes. Mail order prescriptions. Oh my gosh. So yeah, this is not a good thing. This is going to be a very bad thing. Look at this, closing unprofitable locations. Invest in new healthcare services, whatever those are. So, but yeah, that just shows that the jobs, people are losing money, they're losing jobs, and they can't go to the pharmacy. So that's going to be even all those healthcare jobs, I think will go in the next year or two will go negative. So right now, this is just a bear market rally because it was declining off a false premise. I said on this the tariffs, but pretty soon this will be the realization. Walgreens, all these stores closing, job losses, and whatnot. And if you look at it right now, I talked about this, the CNN fear and greed index. Right now, extreme fear. We're at fear. The next sell off will begin when this starts to reach greed and extreme greed, which I think will come in the next couple of weeks. But right now, it's at the fear, but it's literally not. It's almost at neutral. It's closer to neutral than extreme fear and closer by a lot. So I don't expect any big sell off right now because when it's in the fear and extreme, generally the greed or extreme greed is when I think it's coming. And want more proof that this is probably just a bear market rally. It doesn't mean it can't make a new high, but Buffett, I talked about this. His big cash position, I said it meant a lot more than people thought. Departure. Buffett's Berkshire departure. So the end of the year. So I think the market it won't crash this year, but I think it's the beginning of the bear market. And I said ad nauseum, look at how the gold did. It took a year and a half. This was a bigger bull market than the gold. This one started in '09, and 2024 is probably when it topped. So that's 4 or 5. This is a 15-year bull market. Gold was just a 2001 to 2000. So that was like a 10-year. So this might go sideways for like 2 to 3 years. And then the crash comes. And Jordan might end up, Jordan Royburn said he doesn't expect any type of market crash till 2027 or 2028. And that might end up being his best call. You never know. I think the days of investing long term in the stock market are over. They're going to come back in 10 or 15 or maybe even 20 years. But I personally think they're over. It's a trader's market if you want to go long. That's just my opinion, not investment advice. But look at this. Warren Buffett also agrees with me. That's why he's stepping down. Warren Buffett, we know. Look, he named his successor in 2021. Why didn't he step down there? Warren Buffett is an opportunist. That's what he is. And he sees the bear market. Don't forget who his father is. And so that's why he is stepping down now. He doesn't want to be known as the person in charge when Berkshire Hathaway. In fact, anything this would help his legacy was people be like, yeah, when Warren Buffett stepped down, Berkshire fell apart. Warren Buffett is Berkshire, and that's why Berkshire doesn't exist anymore. Look, Warren on Trump's expansive tariff plans talked down this year's market volatility. See, this is what I told you. Trump tariffs are just the excuse. They are not the actual reasons. Warren Buffett, he is void of criticism. You criticize him, you're horrible. I've never seen anyone be so immune. And he is unofficially not allowed to be bearish on the market ever, even though I was talking about, watch what he does. The cash positions, resigning from Berkshire. He clearly believes, I always said, watch what they do, not what they say. So, yeah, it won't be far away if needed. No intention to sell. Yeah, right. So anyway, you see what it is. Like, look at this. Berkshire, whatever. So anyway, and this is just more proof of the economy doing poorly. People are visiting McDonald's less. Join Starbucks and Chipotle. Well, yeah. This is drop amid consumer pressure. The economy's bad. Things aren't going well. And you see it in what do people start? Well, what do people start doing? Well, let's say I can go to Starbucks, get a $5 coffee, or I can buy 20 coffees for $5 at the store. You know, those little, Keurig cups. And so that's what people are doing. Okay, I can make a peanut butter and jelly sandwich at home. $5, I can make 20 sandwiches. I just get a whole sleeve, the loaf of bread, some peanut butter, some jelly. It's probably not even $5, $10. And I can have 1, 2, 3, 4. I can have 10 sandwiches. I have lunch for the week for $10, or I get lunch one day at McDonald's for $10. You don't need peanut butter jelly, you need peanut butter and bananas. What do you think people are going to do? Chipotle, who's going to spend like $18 on a burrito? I can buy rice, I can buy minute rice, buy a little bit of chicken, tortilla, a little bit of vegetables for like $10. Chipotle is just grossly over expensive. I can buy all that and make 20 burritos. So yeah, this is just goes to show you. Let's keep going. Let's share again real quick. Just ask McDonald's, Chipotle, and Starbucks. Their customers are in the midst of an economic squeeze. People visiting less, says McDonald's CFO. Look at this. The big reason is Trump's tariff policies and flip-flopping. And this is what about last year? What about 2024? That wasn't there. Remember what I said? They need an excuse. All tariffs are is an excuse. So yeah, so there it is, right there. Oh yes, earnings call in April. So yeah, the reason why is Americans are broke, and that's why it has nothing to do with. So anyway, let's get into the other. Actually, I have two other stories I got from Seeking Alpha I was going to share. There's a couple other stories I'm going to shell, but look at this. This is actually the sign of a bad economy. Churchill Downs sees record betting volume on Kentucky Derby. Yeah, this is what people do when they have no hope. They go to gamble and they hope they could score big. Hey, I can't pay my rent. Well, what if I put this $100 down and odds are 6-1, I get 700, and all of a sudden I have enough, I win $700. I have enough money to pay the rent now. So, and then maybe I'll try to gamble next month. Or maybe put 1,000 down to get $6,000. Now I got enough money to get me through the next couple of months. So anyway, this is not a good sign. Look at that. Kentucky Derby program set a record. 345 million, tops last year's record. So, Kentucky Derby, what can I say? These are, and there's not any greed yet, but look, momentum stocks are preferred amid seasonal challenges. So, as you can tell, I've been reading the retail investor is betting big on the market, but part of it's just the gambling. And just those are just things I want to say. But in terms of the big picture, the markets and everything, this goes into thing that there's going to be a stimulus coming. I think there'll be the tax cuts. They'll have big tax cuts coming. I actually have a lot of gains next year. So, from a selfish standpoint, I mean, they're going to slash. I hope they absolutely slash and gut the long term capital gains so I pay less. I don't think they should, but they're going to. I mean, I'm for cutting taxes, but if they're going to spend this much, they can't cut taxes. That's why I said they shouldn't. If they cared about any of their AAA credit ratings, they shouldn't cut taxes. But yeah, and again, I do hope they cut capital gains taxes per se. But yeah, stock market, Warren Buffett, he's stepping down at the end of this year. So maybe the bull market has one more year. So that's what I'm thinking. I don't know. My stock market calls aren't always the best. So part of me thinks the bear market started, but that could be a contrarian indicator. So it could be one more upswing or not. I thought at one point it would go to 7,000. I don't know if it will, but I think another stimulus will be coming, but they need to give the Fed the excuse. And right now the Fed's not giving it. So with the interest rates, gold I think just it's on a correction, and it's waiting for that next round of stimulus to take it for one last leg. That's what I think's happening with gold. I'm still bullish on gold. I've been dead on that. 3,000. I haven't been dead on because it went to 3,000, then it overextended to 3,500. Now it's come back around 3,200. I think the next leg up is going to take silver to 50, and that's where I'm looking to. So that's all I have to say. You can see though the actual deterioration of the actual economy, and that's going to start showing up in the economic numbers. If it doesn't show up this year, it's going to show up next year. We're starting to see it in this year's data anyway. I remember a couple years ago, all the jobs numbers were 250 plus, 300,000 plus. Now it's like 170 something to celebrate. So anyway, that's all. Remember, not financial investment advice. Read the disclaimers. I'll see y'all next video.